this thing working? Yes, it is. And Secretwars, digging deep, finding potential stage 2s, breaking outs, maybe stage 4s, precursors to whatever trend might be out there for the sectors and the indexes, and maybe continuation breakout on stage 2s. I know NASDAQ is stage 2. This chart has caught my attention. Hasbro, HAS on NASDAQ. And let me check something. Yeah, Hasbro Inc. See, I'm not very familiar. Some tickers we know, some people know exactly what the underlying company is. Sometimes I don't know, and I'm happy for that. So I don't use preconceived ideas I have of a certain product that I love or don't like to value or estimate what the price action is going to be. It could be in line with what I think. It could not be. That's a coin flip. Who knows? So the best is just imagine that the ticker is ABC Inc. And just treat it that way. Treat the price action just as it is, just as it shows. Right now, this is the Friday candle. Let me highlight that. It's it's today's candle. Today is Wednesday. The week. It's the week that's going to close on the 14th. So that's this week's candle. So we're just going to wait until it closes before taking a final decision. But right now, what I see for Hasbro, it's been in the stage 2 for a while. Consolidation, maybe stage 3 here. Pop up stage 2. Consolidation stage 3. Decided to pop up again, stage 2. Consolidation stage 3. Pop up stage 2. And right now, consolidation stage 3 and giving severe signs of stage 4 breakdown. Severe. So I'd have to go check the sector. Let me just pop that up. Pop my 10-year chart. What do I have here? Ooh, I don't know why sometimes my software has these crazy candles and they just queue. Let me just remove, go there. All right, okay. So I here have 44 months, monthly candles, and here's the 30 SMA, so it's 30 monthly candles. And if I go back to my classical charting framework, I would have support, resistance there, and support right here. So this is a potential breakdown. So the way I would usually play it is if I would have had a monthly close below the 90 line, nice round number, I would add the measured move down from there. If I have a tight formation that spans over 6 months, maybe close to a year, has 10% move, then we could actually triple the target. That means it's going to explode even harder out of that range. And right now, 90 to 97, that makes 8%. So that move could actually be, the measure move would be down here. So that's how I would have looked at it with my regular framework. But right now, since we're doing Secretwars, it's to see if this is a stand play. And here's how it looks like on the stand. And here it looks like on the stand with what? What's this? It looks like a cloud. This is some crazy stuff, man. Again, stageglasses.net, giving me a whole bunch of stuff to look at. And I had some questions that I asked there, like about those trend lines. And they actually don't use trend lines anymore, or rarely, or haven't used them in a while to exit. Remember when I've been doing my analyses, Stan. Let's say I'd have a breakout here. Let's say this is a breakout candle here with a lot of volume. RSI going in upwards territory, going up over 50. I'm above resistance. I'm above the 30-week moving average going up. And this is a perfect stage 2 breakout. You can have the pullback. See, 1 month, a month and a half back. You have a nice pullback. Then you have another chance to go back in. So what you have to do, you could have drawn trend lines. And as Stan says, investors and traders, they exit half the position when the trend line is breached. Like, let's say it would be right here around this area. They don't do that anymore on the stageanalysis.net. So what they do though, on a completely different note, is use these clouds there. I'm so afraid to pronounce it properly. Hold on. Add view my legend. They called Ichimoku. So I think Ichimoku cloud, and they use that. I had different techniques to find out my support and resistance, but I think the purpose of this, and anybody could correct me, this is like the first day I'm looking at this. I probably looked over this technical tool back in 2006 or 7, and I just went over it. I didn't understand it then, but with our experience, you could always look back at everything that's out there and just once in a while grab one and see how it fits, how it could help you. Keep it clean. Use your experience to see that view, your experience plus what it is, the technical. How do they call that? It's a comprehensive study. So my broker calls that a comprehensive study, and how it is and how you could apply that. Because we don't have much experience. It's like, I would tell anybody, just read, somebody recommends you a book. Let's say I'm recommending you Stan Weinstein's Secrets of Profiting in Bull Bear Markets. Okay, read it. You're a novice. You have 1-2 years, whatever, under your belt. And then trade. Do a system. Then after that, take patches of it. Patch it with somebody else's recommendations. Somebody 5-6 years later, or even after 3-4 years, reread the book. Even Stan talks about it in his final chapter. Go back to his book, reread it, and all that experience, it's going to make you, it's like you're looking through different lenses. Your brain's going to ingest the data that you're reading a second time, adapt it and compare it to your experience, your real life experiences, and then you'll be able to formulate new theories or new ideas and how to better use whatever the book told you the first time. And probably on the third reading, maybe after 3 more years of experience, and you reread the book another time, that'll be the same thing. So I was just thinking out loud that maybe Stan, his system has evolved over the years the same way. Changing he wrote the book, then he had 5, 6, 8 more years. I wonder if there's a second edition or a third edition of this book where he changes stuff, where he doesn't use trend lines like stageanalysis.net, that doesn't use the swing rules, because you realized finally it was good, but it wasn't as necessary. You were exiting it too early. And all this to come to the clouds. So he's a trader, the handle on the moderator, creator of stageanalysis.net. He uses clouds to identify support and resistance, nearby support, nearby resistance. And I think the clouds are just it's 26. So you see it pushes, let's say there was a resistance here or support, it pushes 26 candles in the future. And so later on, that's what you see right here. And I believe that becomes support. So eventually the price goes up, and if it comes back down, then that support is still valid right here. And I guess that's to give more credit to that support for that period of time. And as time moves on, further away support has less and less value because it moved down with the price. You can even see it here. See, the price action stops here, but I have values for it already. It's like a leading indicator. It's already ahead of the price action because it takes whatever value here, whatever its algorithm to detect the support and resistance. It's already applying it to the future. What else did I get from that? I think green is support. So this is eventual support. And I guess when you're in uptrend, you're just creating support, right? You're going up and then it's testing, it's making support. You see right here, all this zone. I think it's represented here. Or am I wrong? I'm not sure. But it's in the future for those 26 candles in the future. And if ever you have red, then that becomes resistance. So right now, see the price action start going maybe down. Okay, here. So now if it can't go above that, eventually there was like a crossing point, and this now becomes your resistance. And you could have the beginning of a downtrend that's probably going to go. I could show you some other charts. It's going to go down here and go on and start following that cloud that's going to start going downwards. A lot of stuff overlaps. Maybe just the moving average, it's enough. But this is really, it's more precise and it's built on the actual price action. So I said, okay, I'm going to try it. And here it is. We see in the uptrend that you're always above the support. And now it's going to help me identify my stage 4 breakdown if the entry is good. And I think Isa Trader said he won't enter a trade or rarely enters a trade if here there'd be a red cloud. You have to be above the resistance to enter the trade. And here would be the same thing. You want to have no support here. So you see, it went through the cloud and no more support. So right now it's full steam ahead. There's whatever support we had here back in the days, it's far enough that it doesn't matter anymore. Those 26 frames, they don't count anymore, or they count less. And you'll start building a red cloud on top. So that's what I've gathered from looking at it today. And so right now, if I would look at that, I would say that for this stage 4, I have this nice pattern right here. I'm under the support, the cloud of support. I'm under the 30-week moving average. I'm under the support line from the classical chart pattern. So if I could get a close below 90, I think this is a definite stage 4 play. Let's look at the RSI crossing over the halfway point 50, going down. And I know volume is not that important for the for breakdowns. It's mostly fear, but let's just see. This is Wednesday, Thursday, Friday. Maybe it could pick up the volume, the negative volume on that red candle. If it ends up red, who knows? What else did I notice? I looked a lot today at the volume. Let me jump right here. Look at that. Here's the breakout. And I'll come back to that stage 4. And the pullback was on small volume. So that always came to me. Somebody said that, and okay. But right now, because I mostly trade Forex, or I do stocks, and I do a lot of Forex because I love the liquidity, the precision. It's very, very appealing to me. And I don't know, my broker doesn't offer volume on the Forex. Maybe that's why I might have put stat on the side. I said, look, I want to trade mostly Forex, and I can't do it because I don't have volume. Maybe I have to find another way. Maybe they'll add the volume. I know I saw in the bar charts or some other sites on the internet, I could punch in my Forex pair and I'd get the volume. But now I decide to deep dive it. So Forex, I might continue just trading it with my classical chart pattern, my simple framework. Anything else I could get volume on, especially stocks. The volume is very telling. So right now, if you had the breakout, you want high volume on the candle going in your direction, and on the pullback that happens most of the time, you want low volume. And you see here, see all these candles, they're the red candles. Everything's like all that there. Not a lot of volume. And when it starts picking up again, you have volume picking up, and then big candle right here. This one right here, or even see it gapped up. It was so huge. So this is the type of action you want to see. Increasing good volume on the breakout candles, and you don't want to see see for this candle right here, you don't want to see high volume on a red candle right here, this one. I took out my crosshairs, if you guys noticed, because it was highlighting too much. I'd have this, like, these boxes everywhere, and it was hiding the screen. So I just realized that if I could turn off the crosshairs. So if you notice, it just barely highlights the candle when I'm moving on the volume indicator bar. So you see high volume on the red day, and well, it just happened to be, but it's like it's the top is it didn't go above that. So that's very telling for me. Hey, where's that showing up? Okay, there you go. Inside the legend. That's what you don't want to see. But I've noticed, I've been looking at it some more times, and even if you see, here's another top pattern. Yeah, just about here. And on this red candle, volume picked up. So I know it's fear, but I like knowing that there's I could still use that volume indicator for breakdowns, for valid breakdowns. Yeah, it had high volume. Here's the top. And investors would have put their sell stop right above the top here. You would have entered here. Traders, their sell stop might have been here. Traders would have been out right here with this candle right here when it pulled back. Pullback was too severe. And you had pullback, see, on high volume going back up. So it wasn't the best time to go stage 4. And look at this. You had the cloud below. If I would have had this, maybe this comprehensive study, I would have said, okay, breaking down, maybe just early stage 3, 3-week moving average, maybe not that moving downwards enough yet. And this is just potential resistance that was already declared, support that was already declared previously from all the candles, 26 candles before. And look at that, it just resisted through that, and it brought the price back up. So that's how it could be useful for the and you see, just continued. So that was a failed breakdown, and if I would have had this comparative study, I wouldn't have gone in here, because if I would have done it the Stan way, let me show on the legend. Let's get rid of the right there. I would have had my breakdown. I would have entered. My classical charting way, I have this concept called walls, which is previous resistance turn support. So what I would have done, my classical charting way, and I always take the shortest pattern to a target. So if I have a bigger pattern here, and there's a smaller pattern closer to the breakdown point, I always take that pattern. I want to increase my chances of reaching my possible target, and the closer the target is, I believe the better I have a chance of reaching it. And I always check to make sure that I won't run into a wall. So right now there wouldn't have been any wall. That would have been my close intermediate target with my classical chart pattern. I would have put in my sell stop here, my buy stop here at the top of the candle, and my profit limit right there. And when I reach my target, yeah, maybe with this candle here was a little 64.91. And I also put myself on the right side of round numbers. So let's say I would have had target at 65. I would have put my target just slightly above, reduce my reward, hence have a lower risk to reward, but increased chances being on the right side of a round number. All those mom and pops or whoever put humans who put targets at buy stops at 65. You don't want to be at 64.99 or 64.98. You want to be at 65.01 for your buy stop to get hit with least resistance possible, thus increasing your chances of reaching that possible target. And even I probably have that thought, and I think I took it finally from the Stan book, because rereading it, he always says to put yourself on the good side of a round number, either to protect yourself or to protect yourself, essentially, because he doesn't have profit limits. He only has trailing style stops that he moves manually up. So that's two different methods. And the clouds for Stan seem to be holding up good there. I'm probably going to need more examples. But I like it, and it's visually telling there. It's kind of cool having this green and red cloud hovering around there. I feel like I have too many indicators and studies now on my chart there. But I guess I'm getting to be one of those guys who has a whole bunch of indicators and has a reason for each one. But I'll keep it for now, as long as I respect the framework. And right now you see that stage 3 did not become a stage 4. Actually became a stage 2. And with not an aggressive stage 2, and stayed a stage 3. And right here, stage 3, or slightly non-aggressive stage 2, now has a real breakout with that crazy breakout volume right here. And off she went. Pull back with not too much volume, red volume, that's what you want. Price action kept going up. And I would have probably had my trend line here, and I would have probably sold half my position right here. 1, 2, 3. I would have sold here about for the trader and the investor half the position, and the remainder. Did I move my sell stops along the way? Right here. Yeah, right here. But the trader, okay, it's below the 30-week moving average, so the trader and investor would have bailed here. So that would have been the stage 2 right for there. You're all good. There's no red zone. There's no overhead resistance. And now 30-week moving average, usually when you start getting out, trend line violation, I notice that often the price starts getting closer to through the week moving average and starts creating stage 3, a flattening of the moving average. And that's where we are today. So we're below the 30-week moving average, haven't went up. It tried to go up right here, had one candle close above it, but after that the price started going back down. It's not looking too good for Hasbro. I'm definitely going to keep an eye on this, and Friday this could be a candidate that I jump in. Everything's lined up. I just hope to see that volume pick up, but fear might pick it up later. So keep Hasbro in your target. Have fun with those clouds. I kind of like them, not to give me buy or exit signals, but just to keep it clean. Give me a good visualization on actual support that might be in the way that I might omit or not see. Kind of a cool way. All right, that's it for today. Another candidate, and I have another one lined up for tomorrow, but I'll keep that stuff fresh, guys. All right, see ya.